All right, what's going on, guys? Welcome to the Gen Z Stock Trader. Today's video, I'm going to be explaining to you guys how, as a 25-year-old who's been investing since I'm 18 years old, so for the past 7 years, I was able to accumulate a portfolio of $150,000 before turning 25 years old. Now, I have to be very honest with you guys. I was very fortunate, and I'm very thankful, and I'm very lucky to have been exposed to the market at a very young age, specifically thanks to my parents. My father started investing when he was 33 years old, and he suddenly realized that the earlier you start, the better it is, which is 100% true. So he really wanted his kids to understand, so me and my sister, to truly understand the power of compound interest and how it works over time. So I've been hearing things about investing and stocks and companies and equities and securities since I was 14, 15 years old. So just that was a big advantage that I had over other kids my age. And I'm super fortunate, and I understand that a lot of people don't even have exposure to markets or securities, maybe ever, because it's just not a part of their surroundings. So for that reason, I already kind of had a step forwards compared to other kids my age. I was already winning the race, if you will, due to the fact that I had a privilege of being exposed at an early age. And if I'm being completely honest with you, if you're my age, it's still not too late to start investing. As I said, a lot of people, like my father, started investing at 33 and he wished he would have started earlier. I started at 18 the moment I was legally allowed to. There's a lot of ways to do it, and I think it's literally the best thing that you can possibly do with your money is invest it. It's assets always raise, always assets are always going to go higher every year than salaries. That's been proven by a lot. Like I think salaries go up like 1.75% average a year. Assets for the past 5 years have been like 23%. For the past 10 years have been an average of 15%. So assets are excellent to be invested in. This is going to be more of like my personal story. Other videos I'm going to explain exactly in more detail how I did it and how I would do it again by the age of 25. Like if I was starting right now, what would I do? What I think future companies are going to be like, what I think the Mag 7 are going to look like in 20 years, other technological investments, advancements that are going on in the world that I think people should be interested in investing in, or at least looking at them, keeping an eye out for them, because we are living in a weird time where things are changing really quickly. So let's get right into it. I'm just going to explain to you guys how I started and what my first investments were. So I started off, every single investment that I made were individual stocks. At the time, what I did was really, I didn't overcomplicate things. I wasn't analyzing completely the balance sheets and the income statements and the cash flow statements. I would typically just look like a company that that I knew. So something that I heard before, not just these random companies that you never heard of that kind of work on the backside of the society, like something that I knew everyone used. That's already a game changer in my opinion. If you don't want to spend too much time looking at numbers, think about a company that everyone knows. So Procter and Gamble, Netflix, Meta, I don't know, Tesla, all those companies that you hear all the time. And what I did was that since I am Canadian, I have two of these companies that I started off investing in Canadian companies. One of them did pretty well. The other one didn't really do anything. I didn't lose money on it. I didn't really make money. That happens sometimes a lot with companies as well and stocks that you invest in. They never, some of them work out, some of them don't. The important part is just to be on the market and be invested. So the first company I bought was a Canadian railroad company that pretty much owns almost every single railroad system in Canada. It's called Canadian National Railway. So let's go here to the computer and I can show you guys a little bit of the chart here, talk about the stock. So this is what the chart looked like since 2013. As I said, I turned 18 in 2018. That's when I was legally allowed to invest. So I invested this money in March 2018 when the stock was at around $100. This is a stock that did a little bit, then it went up a little bit, but around 10% a year. It wasn't this crazy. There are some more stocks on the list that really changed, I guess, my life, if you will, or my understanding of how stocks can make a lot of money. So Canadian National Railway, I bought it at around $100. And I actually got lucky here because last year I decided to completely revamp my portfolio and my investment strategy. So I changed a lot of companies. Every single company that I'm going to be talking about today, I don't actually hold right now, and I'll explain to you guys why. But this is how I started and how I made my initial 150K in capital. So I was lucky. So since last year, I decided to revamp my entire. I sold it in around 2024, pretty much like at the top at like 170. And then it started coming down a little bit. That's just Canadian markets as well right now. They're kind of in a turmoil with the tariffs and the uncertainty with the government. The house prices are too high. People are losing faith in Canadian markets, which is understandable. This is cyclical. We're just living in a cycle right now that not much money is coming foreignly into Canada, specifically in stocks. And also, the Canadian banking system made it a lot easier recently to invest in American equities, so American companies with Canadian dollars, which is really cool. That didn't really exist when I started. I had to transfer my Canadian dollars into American dollars to then buy American stocks. Now you can buy through Canadian markets directly with Canadian dollars, which is really nice actually. That's really cool. So you don't have to actually transfer your money. Not every company, you can't do that with every single company, but some of them offer it. So this is one of the companies that I invested in that made, was a solid company. Didn't really move that much. It moved a little bit, and then it's not one of those companies that I'm going to 5x my money, but I'm definitely going to make, 70%, 80% returns over 5 years, which is pretty good. Actually, it's pretty excellent. That's around 15% average returns. The second Canadian company that I invested in, this one you'll see did not do good at all, really. It's Jameson. It started off doing good, and then it really just flattened out and wasn't really moving. Jameson is a vitamin company. Another company that I knew. This was a company that I buy my vitamins from. So I was like, oh, Jameson, I know Jameson. Obviously, what I used to do, instead of looking intrinsically into the income statements and balance sheets and really try to understand the whole thing, I would just look at revenue and profits and see if every year they were making more revenue and if they were making more profits. So if the company was growing. I kept it very simplistic. I wasn't looking at the markets and stocks in a very complex, intrinsic way. So Jameson was one of those companies that had growth, but it wasn't astronomical. Like looking back at it right now, I would not have invested in this company because now I take more risks since I'm able to. I have more leisure and more capital to do so. So back then I didn't really, so I didn't want to go into companies that were very risky, and this one isn't that risky. So this isn't a company that's gonna crash and burn and you're gonna lose all your money, but it's not a company that you're gonna 10x your money in 10 years. So I invested in 2018 as well. I invested around here at like I think it was $24 if I remember correctly, and I sold it at like $32, something like that. So really not, I didn't make a lot of money off of it in 6 years, but I also didn't lose money on it, which is nice. But these American companies that I'm going to show you are the companies that really shot me into being able to, it brought me to another level, pretty much. Like there's no other ways to say it besides that. The first company that really exploded for me was Costco. This company I invested in 2018 as well for like $196. Completely shot up. I sold it, I think, for $893 or something like that. It was around here, 2020. Yeah, so 2024 December or November, I believe it was. Yeah, so it was around here. Like I sold it for I made like 400% returns on it. That was one of the first companies that I saw. Oh wow, okay, like stocks work. Like you can make a lot of money from this. Now you will see that American stocks for the past 5 years have drastically gone up. Obviously, there was the COVID thing where they went down a little bit by 30%. There was a COVID crash, and then they started printing a lot of money. Inflation went up, and then asset prices went up automatically. They started cutting rates all the way down to zero. So every asset exploded pretty much vertically. That's why you see a lot of these companies, like this was during COVID, crashed a little bit, then they started printing a lot of money. So all these big companies started shooting up, especially a company like Costco was affected by COVID. But since its primary revenue stream was the memberships that they do, which is genius. Costco is so smart for doing that. For a retail store, who would have thought? So the business model of Costco is excellent. And as I said, it was a company that I was very aware of. I've been going to Costco with my dad ever since I can remember, So Costco is a company everyone knows. It's a solid company. It's a growing company. It's a good company. It's well managed. And I honestly right now still think it's a good company to invest in, but it's at a point where the market cap is so high. I think it's at like $500 billion that for you to double your money another $500 billion has to be introduced into the company's market cap, which is, to me, that would take too long, and I'm looking for more aggressive investments right now. But when I did this at the time, it was a way smaller company, and it was a great move. So Costco was one of the big money makers. The next one that was another big money maker for me was Meta. I decided to invest in Meta a little bit later than 2018. I invested in 2020. So in 2018, actually, I remember it crashed a little bit because there was this is where Mark Zuckerberg got caught with stealing data or something like that. There was a lot of court trouble. I forget exactly what the reason was, but it was something about stealing data and selling the data abroad to other companies overseas. So there was a lot of turmoil. The revenues were good. The revenues were still solid. The company's financial health was good, but obviously because of the media turmoil, the stock dropped a little bit. So I didn't really want to get into it. And at that time, I didn't really understand fully how stocks work. Now, if I would have studied a little bit more of the stock and the financials, I definitely would have bought it when it crashed 15% during that whole thing. But I bought it around here in 2019, 2020, 2 years after I could. I remember because COVID was just happening that I bought some Meta stocks. And then Meta exploded. There was another media thing here as well in 2022. I remember that. He went to court again for the same reason, something with the selling data. So there was a big drop here, which I remember vividly. I was like, what the hell is going on? And then Meta just, every single corner financial was just so much better than the other. Their market cap quadruple, even 5x in the next 3 years. It was insane. So Meta, this was my first company that exploded in such a short term. And again, I sold it in 2024 November. So around here, I made maybe 400% returns on it, or 350% returns, something like that, over 5 years, 4 years. So it was pretty damn good. This was one of the companies that I put in a lot of money in it. So it helped a lot, because if you put in $1,000 and you make 500%, yeah, that's good. You're 5xing your money. But if you put in $10,000 and you make 100% return, you're making a lot more money of it, even if the percentage of the return is less. But just the fact that you invested a lot more money, you're making more money. That's just simple mathematics right there. So Meta was my biggest holding. So even though it wasn't on paper percentage-wise the biggest return, it was the biggest return profit-wise because it was my biggest holding in my portfolio. So Meta really helped me out to blow up my capital, I guess you could say. And this next company is the one and truly. This was probably my best move at the time, and I'm so happy I did it because I wasn't sure about it. This one really made me most of my money, if I'm being honest with you. It was Netflix. Now, I did not buy Netflix in 2018 when I could, because at the time I was so young, I didn't have enough money. I only had a couple grand invested. By the way, you got to be patient with this stuff. This really taught me a lot recently. I'm glad that I'm my age right now, that I experienced this stuff. I started investing younger, because I saw how long it takes for compound interest to truly have effect. And Netflix was one of them. In 2017, 2018, everyone knew about Netflix. I think I started knowing about Netflix in 2014. But obviously I was 14 years old. But damn, $34. If we could have bought Netflix there, that would have been nice. But I remember when Amazon Prime came out, or Prime Video, it completely crashed. Then Disney Plus came out. There was a bunch of competition. People were saying that YouTube's better than Netflix, Prime is better than Netflix, Disney Plus is better than Netflix. But I remember this was one of the first stocks that I decided, why did this go down so much? Is this an opportunity? Let me sit down and actually look and deep dive into the financials and do a more of a technical analysis and a fundamental analysis in this stock. And this was when I realized that the crash was just more of a market panic because of the new competition that was rising. I still thought Netflix was, everyone that I talked to was still using Netflix a lot more than Prime Video, HBO, or Disney Plus. So just there and then I was very confident in this stock. And the financials were excellent. So I looked at this and I was like, the stock's undervalued for the money they're bringing in. So I bought it in 2022. I put in a lot of money for around, I remember it was around $150. And this thing over the course of the next 3 years just exploded. It completely exploded. Netflix took over, and I was so lucky because I did really buy it at like the dip, I guess you could call it. So I got very lucky here, and it just exploded. I did sell it a little bit. I wish I would have held on to it a little bit more. I sold it around here in November of 2024 to again diversify my portfolio a little bit more and go more aggressive. So it was like 400%, 450, 500% returns on it, and it was on paper my second biggest holding after Meta, but the percentage return wise was so much that Netflix really exploded my portfolio in a good way. And when I sold it, it gave me the opportunity to then diversify that capital into different, more aggressive stocks, which is where I'm going to show you right now. I'm not going to show you particularly for this video the exact stocks that I'm now invested in. I'm saving that for a new video, but I will show you guys exactly the returns that I've been having recently. So this is the review, the return rate of my entire portfolio. So this is my entire portfolio since the beginning, so since 2018. Obviously last year was when I became a little bit more aggressive. And by the way, you have to understand that we are in a bull run right now, so every big company stock is going to go up and everyone stocks are looking vertical. You look at Apple, you look at Microsoft, you look at Nvidia, especially Nvidia, but they're all kind of vertically right now. So whatever, if you had companies like big companies, Google, Amazon, you made money in the past 5 years, there's no doubt. So in the beginning, I've been having around 22% yearly compound return rates, which is pretty damn good. And my aggressive portfolio, so I have a specific account that's just for being a lot more aggressive, which is here. And you'll see that last year, in the past year, I made 301% returns on it, which is unrealistic in the beginning. This was simply because I started investing in October is when I became very more aggressive with this account, and I was dedicated my entire like free time to this to try to really analyze stocks, understand movements, understand market trends, market cycles, what happens when why rate cuts are so important, what happens when the Fed prints money, what happens when this happens, all this stuff, new technologies, looking at history, understanding what the future is going to hold, quantum computing, how can AI help, like all these robotics, all these companies that I was looking at and trying to figure out market trends. I dedicated all my free time on this. So that's why last year, for the past year, I've had great returns because I've been treating this like a full-time job pretty much. Like I spent all my time doing this stuff and really trying to learn. And that's the reason why it's at 301% for the past year. It's unrealistic. Even the greatest investor of all time, Warren Buffett, has an average compound interest rate annually of 22% for the past like 70 years, which is crazy. Like that's insane. But obviously he had some years where he made 1,000% return, things like that. But for this, like I was at the right place at the right time. Like the Fed were cutting rates in November and October last year, and then Trump got elected. That for some reason had a big boost in the market, not stocks and in crypto. That's going to be for another video too. I'm going to get into my crypto investments. So that's pretty much how I made $150,000 capital and my portfolio being at 150,000. It really started with these 5 stocks, and then I diversified into bigger, more riskier things. So this is just to show that you don't need to know much about the market. You just have to be in the market, and you got to hold. Don't panic. Don't have an emotional attachment to it. Leave it in. If you know it's a good company, review it 30 minutes a week. It doesn't have to take over your life. That could be a problem too. Some people go crazy like looking at this stuff and they panic, and it's not good. So the number one rule is to simply be in the market and save as much money as you possibly can. Dedicate at least, I'd say if you can, obviously if you have to pay rent and food and everything's expensive now, dedicate at least 10% of your income every month into this. I know it's hard. Like I know some people get paid more, some people get paid less. Some things are more expensive depending where you live. Like I understand that. But you have to be, if you're able to go out to restaurants, if you're able to go hang out with friends, you're able to save money. So just try to save as little, like as much as you can, even if it's just a little bit. All you have to do is be in the market. It's in my opinion, it's the only way to get rich now. Literally, like if you're starting off and you don't have a business, you're just an employee. Unless you're making like $600,000 a year, but let's be realistic, most people aren't. I believe like the medium household income in Canada is like 60,000 to 80,000. That's household income. So individual incomes are probably like 45 to 50,000. Again, those are just averages. I'm not saying the number exactly. It might be a little bit higher, a little bit lower, but that's what it was last time I checked. So you got to be in the market. You got to play, and you got to play the game. That's the world we live in now. It's not, things are changing fast. More money is being exposed, and money supplies and going into investments and going into assets. And what's fun about the market is that things aren't that expensive. You don't need, $500,000 to start investing in stocks, which is really cool. Like a lot of, if you're trying to buy hard assets like houses and going into real estate, like that's so complicated to start nowadays, especially for people our age. I hear it all the time. People my age, like, oh, I'm gonna get into real estate. I'm like, do you have any idea how much money you need? Not only that, but you're paying taxes on the house. You're paying taxes when you buy the house. You're paying a bunch of upkeep work that costs money. You have to deal with tenants. You have to deal with this. It's such a hassle. It's so complicated. It turns into a full-time job. So it's not really an investment for me to be in real estate. I feel like real estate is good when you're much older and you have the capital to then diversify into hard assets, and real estate, that to me is a good idea. But when you're my age, especially now with the house prices, it doesn't make sense. You have a lot better returns and less hassle on the market. So obviously, you can't just, don't buy whatever you see. Like, oh, I like the ticker symbol, I'm gonna buy this stock. Like, no, don't do that. That's idiotic. I'm gonna be uploading a lot more videos about explaining what I do and my strategy and how it really works, and how to actually do it for my generation. And if you're my age, this is what I do. This is what I am doing. And I think more people of my generation, people our age, should be exposed to this, because we're gonna be screwed. Salaries aren't going up, houses aren't affordable. Like it's bad, and this to me is one of the only ways to actually get ahead. So subscribe, because I'm gonna be uploading weekly here on different tips and tricks about how to play the market, what to invest in, and let's grow this channel, man. All right. Let me know in the comments section down below your strategies or what you're doing if you are exposed to the market or anything like that. Peace out, guys.